Another trading month has come to an end and it's time to sum up the results. This month I made a 30% profit from just 2 trades. Yes, you heard that right, only 2 trades and 30% profit. So make sure to watch this video until the end to see how I did it. Right now we are on the Euro-USD currency pair, and so you're probably guessed both of those trades were opened on the Euro-USD pair. Let's go through them one by one. The first trade was opened on the May 7 with a 1 to 6.15 risk to reward ratio and close at take profit. Every one of my analysis starts on the 4-hour time frame where I look at the market structure. Based on it, I determine where the market is most likely to go in the near future. Because you can't predict the market, you can only assume probabilities. Looking at this market structure, I saw that the market had previously formed a new low, meaning it was moving downward. Then in this area, it stopped in the range, flat. It showed that the price could turn up to hit liquidity or remain in this range. The market stayed in this area for a while, and after taking out the liquidity at the top, it decided to move lower to collect liquidity there. Then again, it stopped and stayed in the range. And that's exactly where we entered the trade. After the upper liquidity has been taken, it became clear that the next step will be to take the lower liquidity, because that's how the market moves. It doesn't go in just one direction, it moves a bit, creates liquidity, then come back to take that liquidity. In the process of taking it, it formed new liquidity. It went down, took that liquidity, and then eventually come back to the next level. That's how the market moves. When you understand this, you can get a good sense of where it's likely to move next. In this case, we determined that after taking that liquidity and forming this impulse, the market was likely to pull back. The first profit target was the 50% level of the impulse, and the second was the low of the impulse. You could already close part of your position here and leave the rest running to the next target. Personally, I always wait for the full target because most of the time the trades reach it. Now you understand why I decided to enter this trade. I look at the 4-hour chart, saw the impulse, liquidity grab, and decided that the market was now going to hit that liquidity. So that was a good place to look for a sell entry. Then I switched to the 15 minutes time frame. What I'm looking for here. First, let me turn on the session breaks indicator to see when the trading day started. Unfortunately, I can't remove this label. It comes with the last trading view update, so it probably stay here. That's okay. As you can see, after the start of the new trading day, there was a big impulse that grabbed liquidity. The market moved sideways in the Asian session. Then, once the London session opened, we saw a huge impulse up that grabbed more liquidity. And obviously, once that liquidity was taken, the market will likely to continue to fail, collect remaining liquidity lower. That's why we look to enter the trade right after the liquidity was taken, because the probability was high that after such a strong impulse, the market will go down to collect the liquidity lower. We saw a specific entry pattern, the one we use in our community, which works really well and give clear entries after liquidity sweep. We see the pattern, placed a stop order, price triggered our order, and the market started to fall. On the first day, the trade didn't reach take profit, but that's fine. We hold it overnight, and on the second day, it hit it. As you can see, it's very simple and clear. But if you have any questions, feel free to leave a comment and I'll answer them. Now let's move on to the second trade. Again, let's look at the 4-hour chart, and what do we see? We see that the market had been moved down for a while, but at the same point, it changed direction. It started to move up, likely to grab nearby liquidity. Maybe it could go further, but in this specific case, it took the liquidity, stopped, and then turned to take lower liquidity again. So we can say the market was likely to move down or remain in a range. What happens in a range? The market grabs liquidity above and below again and again. This is what creates a range. We see a strong impulse down that took liquidity. Mark this move using Fibonacci tool to draw the 50% level. Why? Because we buy in the discount zone and sell in the premium zone. In the premium zone, we always look to sell. In the discount zone, we buy. If price is moving from top to bottom, we do the same. If price is moving from bottom to top, same rule. Premium sell, discount buy. So we mark this impulse down, price moved into the premium zone where we sell. On that day during the London session, we didn't find an entry. We also saw that the market left liquidity untouched below, which means it could still go down to grab it. On the second day, we found our entry. The first take profit zone was the low here and here. Sure, the market could go further, but we only take what we planned, and that's enough for us. Let's go back to the 15 minutes time frame, and what do you see here? Same pattern. Let's turn on Fibonacci tool again so we can clearly see what happened on the lower time frame. There was an impulse down that took liquidity, then we moved up into the premium zone. No valid entry on the first day. On the second day, the price moved up slowly, went sideways in the Asian session, then during the London session it spiked up, took liquidity and gave us an entry. So where's the market likely to go now? Of course it's likely to go to take this liquidity. This one, and this one. It's much more probable that it will go down than up because it already went up, grabbed all this liquidity, create more liquidity and took that too. Now the price is likely to go down, so we enter the trade. First target, second, third, fourth. In this trade, we made 6.6% profit. Those were the only 2 trades we opened this month. Every trade I take, I share in our private group with full analysis and entry details. The first trade was on May 7 and second on May 16. The rest of the time, there were no valid setups. Yes, there were some potential moments, but the market didn't give us the exact entry patterns we are waiting for. And that's exactly why discipline is so important. This is why it's essential to have a clear trading plan, to be patient and stick to it. Only then you can really success in this game. To prove I actually took those trades and I'm not just making it up, let me show you our private trading group where I post every single trade along with my full analysis. Everyone in this group can trade them. We also have a chat where we talk, trade and grow together. Here's May 5 analysis, what we are watching, what we expect, then the May 7 trade. You can see I shared it with the explanation. This message wasn't edited, it stayed as originally I posted it. I showed the result and open trade. Then on May 8, trade worked out. The next day I posted that it hit take profit. More analysis. On May 16, here's the analysis of the second trade. I mentioned we waiting for liquidity to rise above daily high before selling. Placed a sell stop and waited for the entry. The first order didn't activate the trade, price went higher, but that's not a loss, just no entry. This is how our pattern-based strategy works. We only enter when there's a clear signal that market is ready to move. Then we finally enter the trade. I wrote about it. Again, the message was not edited. I show results. The trade reached take profit during the New York session. This is how I share trades with our trading community. So make sure to join if you want to grow in this industry. If you want to learn a strategy that gives high probability entries, you are welcome in our community. The link is in the description. Make sure to join. I really hope you found this video inspiring and helpful. See you.